That's right, Brian. The Fed minutes indicate a somewhat divided open market committee here. Here's what they say from this July meeting. Participants generally pointed to risks to both sides of the committee's dual mandate. A majority, they say, of participants judged the upside risk to inflation as the greater of the two risks. Remember, it's inflation versus jobs for the Fed. Several participants, however, viewed the two risks as roughly balanced, and a couple of participants considered downside risk to employment to be the more salient risk. So choose your own adventure here on the Fed in terms of what's the biggest threat out there. In terms of the fundamentals, they say inflation somewhat above the 2% goal, unemployment rate remains low, employment at or near estimates of maximum employment. Remember, this is before that big jobs revision that we saw a little bit after this meeting in July. Uncertainty about economic outlook remains elevated here, and some participants mentioned indicators could suggest a softening in labor demand. So maybe they saw some of that data that indicated the revisions were on their way. The Fed also said they expect inflation to increase in the near term. Tariff effects, they say, are becoming more apparent. They say a few participants note that tariff-related factors could lead to stubbornly elevated inflation. And they say that evidence suggests that domestic businesses, consumers, are predominantly bearing the tariff costs. Now, that puts the Fed at odds with the White House, which has said that the tariff costs are being absorbed by foreign countries. The Fed here saying evidence suggests that domestic businesses and consumers are the ones predominantly bearing those costs. Also, they say participants observed that growth of economic activity slowed in the first half of the year. And for the second half of the year, they say several participants expect growth to remain slow for the second half. Two interesting notes here, Brian. One is a decline in immigration, they say, is lowering both actual and potential output growth. And also on AI, they say the risk that increased use of AI in the workplace may lower employment going forward. So two things to watch for in the dynamic in the workplace is decreased immigration and increased use of AI. Brian, back over to you.